Bitcoin moves fast. Everyone asks the same big question: is now the right time to finally buy, or wait for a dip, or wait for a signal, or wait for the dust to settle? This question echoes through every market cycle. Today, October 18, 2025, it feels more urgent. We will cut through the noise. I will give you the simple facts you need. Clear, straightforward reasons for buying. Clear, straightforward reasons against buying. Most importantly, one clear, actionable takeaway for your next move. This is your 5-minute market reality check. Fast, clear, confident. So, why are people buying Bitcoin today? A primary reason is its growing reputation as digital gold. In a world where traditional currencies can lose purchasing power due to inflation, many investors see Bitcoin as a durable store of value. They believe its mathematically fixed supply makes it a unique hedge against economic uncertainty. Unlike fiat money, which central banks can print at will, there will only ever be 21 million Bitcoin. This scarcity is a core tenet of its value proposition, attracting those who are looking to preserve their wealth over the long term. They are not buying for a quick flip, they are buying for a 5 or 10-year hold. Another major driver is increasing institutional adoption. Graphic logos of major companies and financial institutions. We are seeing some of the world's largest companies and investment funds adding Bitcoin to their balance sheets. When a major corporation allocates even a small percentage of its assets to Bitcoin, or a pension fund allocates even a small percentage of its assets to Bitcoin, it introduces massive new demand into the market. This flow of big money provides a level of validation that was missing in earlier years. These large-scale purchases signal to the broader market that Bitcoin is being taken seriously as a legitimate asset class. This institutional inflow creates a powerful demand-side pressure that many believe will continue to push the price higher over time. We also cannot ignore the impact of Bitcoin's programmed supply schedule, specifically the halving. Approximately every 4 years, the reward for mining new Bitcoin blocks is cut in half. This event systematically reduces the rate at which new Bitcoin are created, making the asset increasingly scarce over time. Historically, the periods following each halving have been associated with significant price appreciation. With the last halving behind us and the next one on the horizon, many investors are positioning themselves in anticipation of a similar supply shock. Finally, the simple act of buying Bitcoin has never been easier. On the other side of the coin, there are compelling reasons why some people choose to wait. The most obvious reason is Bitcoin's extreme volatility. The price can, and often does, experience dramatic drops in a very short period. A 20% decline in a single week is not uncommon, or 30%. This level of price instability can be terrifying for new investors, leading to emotional decisions like panic selling at the bottom of a crash. If you check your portfolio every hour, this volatility becomes a major source of stress. Regulatory uncertainty casts a long shadow over the crypto space. Rules regarding taxation, trading, and use as a currency vary by country and keep changing. A sudden, unfavorable ruling from a major government like the United States or China can change market sentiment overnight. That regulatory risk is a major wild card. New laws can affect the value of holdings or how easily you can trade them. The industry also has bad actors, scams, hacks, fraudulent projects. Bitcoin's network is very secure, but exchanges and platforms can be vulnerable. We've seen exchanges hacked and customers lose everything. Timing the market is another deterrent. Even pros struggle to buy at the bottom and sell at the top. After a big run-up, the fear of buying before a correction is strong. During a crash, it feels like trying to catch a falling knife. That search for a perfect entry leads to analysis paralysis, and many never buy at all. So, how do smart investors navigate this complex environment? Well, they focus on strategy over speculation. One of the most popular and time-tested strategies is dollar cost averaging, or DCA. Instead of trying to time the market with a lump sum, you buy a fixed dollar amount on a schedule. Example: buy $100 every Friday, regardless of price. This smooths the impact of volatility. Price high, shouldn't you buy less? Price low, should you buy more? Result: lowers your average cost over time. Focus on education and due diligence. Study fundamentals, not just price. Check on-chain data. Are big amounts moving on or off exchanges? Are long-term holders accumulating or selling? Follow news, regulatory developments, institutional announcements, technological upgrades. Clarify your financial goals first. Ask 2 critical questions. Question 1, can I afford to lose this money? Question 2, What's my time horizon? Bitcoin is high risk, high reward, no guarantees. Need cash within a year? Probably too risky. 5+ years? You can ride cycles. So, we arrive at the clear takeaway. There is no universal yes or no. The right answer depends entirely on you. Bitcoin can be a powerful addition to a portfolio if you have a long time horizon, a solid plan, only money you can truly afford to risk. It is not a get-rich-quick scheme or a path to safe, predictable profits. Approach it with a strategy, not with a gamble. Make small, consistent steps and use trusted, secure services. If you want one action today, open an account on a major, trusted exchange and set up two-factor authentication. Keep your passwords secure, keep calm, and most importantly, follow your plan.